discussions become fragmented, and somehow people are little hesitant in, generally discussing their matters in open, whatever.
Yes, sir. And most of the questions, sir, would be very common, so it would be good,
Exactly,
and everybody
exactly.
will know, sir. सबके अपने
Yeah,
क्वेरीज हो गए तो सबको भी जानने का मौका मिलेगा. What?
exactly. Plus, main thing is to leave this hesitation. We don't have much of
Right, right, sir.
secrecy from each other. If there is something very discreet, which is restricted to somebody in particular, then they can always discuss it separately. But otherwise, I think we are all in the same boat and
Right, right, sir. Absolutely
we
right,
know
sir.
everything about everybody. That is particularly the reason why I don't like to admit um, many sure people here, except spouses and maybe a family here, because we have something very particular, and because I know the psychology. We are very naive people. Generally quite innocent when it comes to different matters. So it's better,
Really, sir. Really.
we keep our matters to ourselves. A lot of people, generally they laugh when we discuss these things. When they hear, I keep getting messages. People who have watched my videos, that you are discussing such simple things. I think maybe simple for you, but for us it's a question of life and death. Because if this is not there, then we are not there.
So
So
simple be, sir. People say it's a simple thing, but I think, sir, no. After like maybe 2 3 years, people forget the simple things, and when we
that's right.
complicate the things, then your investment become different, sir.
Yeah,
वो
yeah,
सिंपल सी भूल
exactly.
जाते हैं सर हम लोग कुछ टाइम बाद.
एग्जैक्टली बेसिकली यही मेरा एक रीजन एक ये भी होता है कि दैट आई लाइक टू कीप putting in words of motivation that whatever you are doing was perfectly all right and you can continue to do whatever you are doing as long as your purpose is growing.
Right, right, sir. Right.
So today's discussion basically, because I have got about a lot of queries this week, perhaps because of the last 2 3 webinars. So people are more concerned, like whatever I am doing, is it correct? Now that I have already collected 2 CR and 1 CR, somebody like more than that. So is it all right if we go this way? So generally, I would like to welcome all of you, and I would like to start with the basic premise how we came about this concept of uh, general. What is it? Okay. So general this financial planning. So the whole idea was that now I have 2 cups of coffee. If somebody wants one, I can share. So we all have come actually to my daughter's place in Panchkula. She's a police officer here, and she has a little baby. So we also like to be with him, and he also likes to be with us. So back to our question. So basically, the reason was why we started all this was because I always felt that we are not growing. We are not actually growing financially, and because of not growing financially, that it is not that we are whiling away our money or we are like spending it unknowingly or without any concern. But whatever we were doing was not in a proper direction. We all know that most of us have been buying real estate. We all know that. So going in that particular way, this was the result of whatever I learned and I tried with myself. Even today, when I discuss some fund with you, when I say that you can try this out, you see, I don't recommend anything because I don't want to fall in the legal tangles that you told us to invest here and you told that. So I can only suggest. So when somebody asks me to suggest, so I tell them that you have this group of large cap, large and mid cap, flexi cap. You can select any of these. And I keep myself restricted to 4 of each. So it's not only about starting. People initially in the years gone by, let's say 15, 20 years before, when somebody, when people started investing, things were much simpler. They may have been expensive. There was no direct mode. Everything was regular. There was entry load of 2.25%. There was also the exit load. There was no capital gains. These things were there. Today we feel very dejected when capital gains comes into picture, but we forget whatever we are actually not paying. We are saving 2.25% on the entire thing, and also on the expense ratio also, it has come down drastically. So all those things are there. And people who are coming in now, they are facing a lot more difficulty with their KYCs, the youngsters or even the senior people who are starting their this thing afresh. And not only that, people who have already been investing, they are also having KYC issues. So I just wanted to share, I have told this last time also, that even for my wife, there was a KYC problem. And because of which it is in our interest that the government keeps changing these rules and keeps asking for KYC again and again in different forms. It's basically for our protection, and I've realized this. And you see, after so many years of filing the returns, let's say almost, my wife has been filing for about 30 years now, 35 years now, 32 years now. So we discovered that her name was actually different on the PAN card. There was a DR doctor in front of it, which I don't know how it, it should not have been there. I mean, the titles are not put, but it was there. And so now it was discovered in KYC that there was a mismatch between the Aadhaar card and PAN card. The income tax department never discovered this, even though the Aadhaar and PAN were linked. So because of this, time and again, KYC comes into picture. Because in India, as you know, or even across the world, people do take advantages of few things which are there for them or it is not for them in different forms. People have even started making scams out of these fast tags by depositing cash in that, and laundering money. That's why that re-KYC of fast tags had come about. So one should not get flustered. Even the senior people may have an issue with the KYC, but that does not make the avenue wrong. You should have faith in it. So, moving ahead with the topic, that when people feel that I have invested, because there are some senior people who have been investing before, and they say that I have been investing in as a resident. I have a resident account, or I am investing through my wife. I am transferring money to my wife, and I'm investing through that. So they have different issues. So I would like to tell you one thing, because that is how we will try to proceed on today's general meeting. That most important thing is that you have been investing. Whether you have been investing with your resident account doesn't matter. The KYC can be changed to the NRO account. If you have been investing as an NRO, doesn't matter. We can just stop investing further in that, and we will start investing via the NRI KYC, which we can do again. So you will have a stream of two parallel portfolios running. One which was you were having before with your resident or NRO account, and another one you can always start with your NRE account. Nothing wrong with that. Even if somebody tomorrow says that it was illegal, it was this, doesn't matter. You have done it. That is most important. At least here, that question will not come like they have made this changes about Sukanya Samriddhi, that you will lose so much interest and it will be changed to this and all that thing. They may do with PPF also, if they decide that no, you were not supposed to have it, kept it running, you were wrong. But with this, there is no such thing. You have invested, that is most important. And the earlier you have done it, that's even more important. So at no stage will I suggest, this is the point number one which you can write, that whatever you have invested, if it is in a good fund, even if it is in a regular mode, doesn't matter. You just leave it, keep it and let it grow, because it is actually growing at a very fast pace. If you've done it for about, let's say 7 or 10 years earlier, and suddenly you come into the group and realize that this I was doing wrong. I got about 5-6 mails this time, messages on Telegram and WhatsApp that I was doing it wrong and I now realize. Doesn't matter. You've done it. That's more important. Very good. At least you are on the path to make your money grow. We will change the methods. It's very flexible. It's very, very flexible, and your money is never lost unless we make an attempt to have a loss somewhere, like unnecessarily switching over or churning the funds. So even if you have to get out of a regular mode and come into a direct, which I feel is not always advisable, but even if you have to, then always calculate the capital gains. Is the capital gains going to be so high that you will be able to offset that regular to direct mode or not. Because now capital gains has become 12.5%. Of course, it will only be on the capital gains, whereas the 1% extra that you will be paying your distributor will be on the entire corpus. So you have to think about that. Secondly, now there is a very common thing which I got 4 messages this time saying that I want to increase my allocation in SIP. One came this day today only, but there have been one which have been coming earlier, and similar for STP. So the question is, should I increase the amount or should I do another SIP? So there were various replies by other members. They said that how you cannot increase the amount, you have to stop it and start another one. I don't see any reason why you need to stop it. Whatever is happening, let it continue. In fact, when you book it for the first time, you should book for about 3, 4 years or 5 years. Because you can always stop it. But when it terminates, you don't come to know. It has happened with me also. For 6 months, you just continue and nobody tells you. You don't get a notice from AMC that your SIP has expired. Like, it's not there. So it's important that if you want to add on to it and the fund is good, there's no harm. If your first SIP was happening on 1st, start another one on 15th of the amount that you feel like. There is no need of stopping the first and then starting the second one. The reason why I say all this about not creating a break is because I am very, very wary about this market. I do not want that anybody should fail to take the advantage of it when the opportunity arises. Like that opportunity arose 2-3 times in this year. Recently, because of the US job data, in the month of June because of the elections and all that. So you should not be able to make a problem with that. I mean, you should not be left behind other people in taking advantage of it. And every penny counts, you know. For you, it may seem a very small thing that what if I could not invest 50,000 rupees at that time? What kitna बढ़ जाता generally? You'll be surprised kitna बढ़ जाता. That amount of money, if you have it, whatever it has grown from June to now, that money you will not throw away. Even 1 lakh rupee invested that day would have given you about 15,000 rupees till September, just less than 3 months, just about 3 months. So every penny, every drop counts because it is your money which is coming from outside, and you should not make any attempts at getting the best return out of it. Second question, 2 questions which came this week is that I have come into some money. Somebody said it's only 5 lakhs, another person said about 15-16 lakhs. So the question was that how should I invest and where should I invest? I mean, should I invest in new funds or should I invest in the existing funds? Now, how I am explaining to you while answering your queries is because I want you to follow the stream of thought in your own mind. Now that you have already started investing, you're on your way. Some people have accumulated 20 lakhs, some have accumulated 70, some have accumulated 1, and few of you are past 2 crores also, some are past 5 also, but they obviously don't ask so many questions. Now the point is that where do you wish to invest? So if you have money, this money has come from elsewhere, and this money is in your NRE account. Maybe it has come from a bonus or something. So there is no harm. All you have to do is you have to look at your portfolio. This portfolio should have been a comprehensive portfolio, which you should have preferably created on Value Research. You can create on other sites also like Morningstar and Prime Investor. But I don't know exactly how much details they give you to play around with. So if you have done it on Value Research and you've taken the Prime service, so it is substantially very good for comparing. So you look back at your funds, existing funds, are they doing well? What do you mean by doing well? How much return are they giving? Okay, fine. What you have to see is that since you started investing in those funds, if you will open your portfolio, you go to the returns tab on top, and there you will get the return of that particular fund. And below that, you will get 3 fields in which you can input your other funds for comparison. And the charts which I normally display on the group is from that. So you can type in your other funds for comparison and you can see that how is your fund doing. You have to see it in two perspectives, that where is my fund as relation to the category. Suppose I am checking the large and mid cap category or multi cap category. So how many funds were there total? Let's say there were 60 funds. So where has been my fund at different times, for 6 months, for 1 year, for 3 years, for 5 years? In that particular space, you can check custom also. If you have gone for prime service, you can check customize also, like for 7 months or 12 months or 19 months, you can check it. So that will give you a good idea. If your fund has stayed in the top 25%, which is called top quartile, first quartile, if your fund has stayed in that for the period of your investment, it is good. It is very good. Don't worry too much about it, because if you will try to change funds, you just might land up in a worse situation than what you think you may have been earlier. Second is that with respect to the benchmark of that fund, category wise you've done, and with the benchmark, where is it performing? When you will accept this. Hi Saurabh, welcome after a long time. So when you compare this, on this chart, you will also get the benchmark and the category also. So that will give you a good idea that how your fund has been working. So it's good. You are happy that your funds were doing well. So now the money which you have, which is in bulk, now you have to distribute it in your funds. So now you decide, is it okay to distribute it in a short period of time, let's say 2-3 months, or you wish to do it in longer time? Sometimes we come into a lot more money, like 2-3 crores by selling real estate, which you wish to invest. So in that case, when the money quantum is so much, it is ideally good that you spread it over 2 years in the same funds, or you wish to add 1 or 2 more funds of that category, or otherwise you can. Since you are already at a stage of doing 2 CR or 3 CR, if you have already that much, you can also do a little bit of experimenting. You can go for some thematic fund if you think it is all right, though it is not suggested ideally. I've never done it, except for the technology sometimes. But in the very funds which you have, you can add 1 or 2 more of the same category or different one, and you can distribute these funds in a period of not less than or exceeding about 2 years. I'm talking about when you have a large sum like 2 crores, 3 crores, which normally come by selling real estate. If it is less, 10-15 lakhs as compared to your portfolio, it's not much. Even as if you are a senior officer, you can easily earn that much in a month and a half. So it's not much of a time. So you can distribute it in this. You can across your 5. Suppose you have 6 funds, and you have 15 lakh rupees. So you can say, I'll put 2 lakhs this week and 2 lakhs in another fund next week. So you can theoretically, to satisfy yourself, pacify yourself, you distributed it across. You might lose some, you might gain some. It's all right. Right. So this is this is a way you're going to do the switching part. Some people who have been convinced that they should go for the STP, which I'm very sorry, but I had to retract this in the past 2 years before, because the tax laws were not very clear, and the deductions, and there is a lot of confusion that how much of the capital gains will the NRIs be able to get back or not. Laws were not very clear. So that time I had suggested that please revert to, please start SIPs. But now again, I am very much in favor of STP. I have always been. So people say that, okay, I will do STP. I also selected a debt fund. But how much should I put in that? And suppose I have 2 lakhs to put, then in how much time I should exhaust that? So to them, my answer is that do not treat this putting the money in your debt fund as a one-time exercise. One. Secondly, don't think that just by putting one time, you have to exhaust that fund. if you want to start STP, you should have it in all the funds, or at least 3-4 of the 6 funds or 7 funds which you have. But that also means that you should try to put more and more amount of your salary in the debt funds, because the debt funds will act like your fixed income schemes. It is possible that by the time, because I am referring to the higher corpus which you have accumulated. So now, if suppose at that stage, you also may be in a stage of life around the age of 40-45 when your children are about to go to college, so you may have to stay back for the education. You may be inclined in general to give up your status now and then, or maybe accidentally you have to give up. So at that particular time, if you have too much money in your NRE FDs, you will have to suffer the taxation for that. So in order to obviate that, what you can do is try to have, first you have to get the confidence of it. You have to start building a corpus in these debt funds. What will happen by building that corpus in debt funds is that, firstly, any surprise change of status which is beyond your control, it is happening. People are running short of NRI status by 10 days, by 5 days, by 4 days. It is beyond them. And the companies also cannot accommodate everybody, even if they want to. It's not the question of few $1,000s which you can also give up, but the question is they cannot sometimes. We know the exigencies. So at that stage, it is very important to have faith in this, in the debt funds, so that your corpus is intact. And secondly, monitoring and conducting a STP is little more convenient because it is not touching your bank account. And we know that having too much money in your bank account has some flaws. You can't have 10-15 lakhs in your NRE FDs and generally. Ashish, can you please go off the video? I'm getting a little distracted. Yeah, you're cycling now. But now, how do you go about building that corpus in your debt funds? I mean, how do you manage the management of the STP? Fine. You have decided on the debt fund, put 50,000 in the debt fund to start with. Moment you put, it comes on the account statement. Now you need to have a little bit of your faith in the working of the debt fund. Withdraw 2,000 rupees. Create a redemption of 2,000 rupees and see how fast it comes in your account. Suppose you do it on a Monday, it should come next day. Most of the debt funds are like that. Suppose you do it on a Friday, then it should come on Monday. And the timing is also there. Try to do it before 3 o'clock. So all this will give you a little more trust. And then you create your STP. After you have created your STP, maybe you have put 50,000, so you are inclined to do for about 25,000. In that case, it will exhaust in 2 months, right? So you try to put little more money. And all I can say is that because you will have about 6 to 8 funds, equity funds, and maybe out of 4 to 5 AMCs, so you will need to have 5 AMCs. Let's say you have 6-7 funds from 5 AMCs. So what you do is, the salary which you earn, let's say in the month of September, and it is credited in October, you put large sums of about 2 lakh in 2 debt funds of 2 AMCs. The STPs are already running, your money grows there. This is a very small amount. Next month, you put your money in other 2 AMCs. Third month, you put your money in 5th AMC and 1st AMC. And like that, you keep staggering. In a few months, you'll start getting more and more faith in your system. See, in this particular webinar, I am trying to put across how you can take your own decisions, because there is no algorithm for this. There is no stats for this. Few things which I thought subjectively that they are good, they have actually not been made any difference to the investment if I would have been doing it in a different way. I'll tell you which ones. So the idea here is that slowly, as you will have more and more faith, as you will see more and more returns coming in your debt funds, you will be inclined to put more and more money in that, right? And next month, again, you put 2 lakhs or 3 lakhs or whatever. more than what your STPs are running. Suppose your STPs or SIPs are running for only 2.5 lakhs or 2 lakhs, then you should put more than that. Let's say put 4 lakhs. So that some surplus is created. Because the whole idea is that when you are on leave, your debt fund should have sufficient amount of balance that it can continue in your leave. And it is very important to do that. Also, suppose you're on ship or on shore and an opportunity comes by where the market has corrected sharply, God willing, 10%, 15%. I don't say God forbid, I say God willing. So in that case, it is very easy for you, much easier and faster for you to switch that money. It is possible that you may not get the NAV date of the same day, you will get of the next day. But I don't think so. A sharp correction will actually come back to the market will come back to its level in the next day or next week or maybe within a month if it has corrected that sharply. So that is the way you have to manage your STPs. And if you create this and this is the what I would call debt fund management, right? In one of the other groups, some gentlemen had said that why should we go for debt funds? Why can't we buy bonds directly? That's a very valid question. And the advantage is also there that if you buy direct bonds, which means NCDs and FDs and other fixed market instruments, the taxation is 10% as against 20% for debt funds. But what it means also is that buying bonds individually from various sites requires a judgment again. You will have to see the rating of the bond. You will have to decide whether it is worthy of your investment or not, and then you will buy it. It is almost like buying a direct stock, a direct equity. It is exactly the same way. You have to understand. Whereas when you are going to a debt fund, I told you there are about 10 different categories. So you can select any of them depending as you understand. As we will move across this, we will also start discussing in the next few weeks what each of those categories of debt fund means. You already know about the equity fund, so we will try to deliberate on the debt funds also. And the classification and what are the quality of papers, how, if you need to check, how do you check, right? So my own financial advisor and distributor is also there. Pankaj is here. So he's one person who doesn't like STPs and he doesn't like debt funds either. He only wants 100% equity. So anyway, so that is what I can say about the debt fund management and also its relation to the STP, because for STP you will require to have a source fund. Some people have also said that why can't I do it from the arbitrage fund, and some people have also given that one of the conservative hybrid funds. I like to keep things a little simpler because there isn't much of a difference between the taxation of it now, and in your case the TDS is always there on everything. So it is better that we stick to something which makes our asset allocation in a particular format, and it stays that way. I always keep repeating this asset allocation in every meeting, and it's very important. It may not be that important when you have just started investing and your AUM, your corpus size is just about 20, 30, 40, 50 lakhs. But as you keep growing in corpus, it is not only the corpus which is growing. You are also growing in age and the life stage. When you started off, maybe you took about 6 to 7 years to reach the first 1 CR. And then you took about another 4 years to reach the second CR and 3 years to take 3 CR. And like that, you'll grow. But you're also growing in age. That means you're also coming close to your financial goals, which means larger expenses. And you're also coming closer to your retirement age. So at that stage, you have to have a very clear-headed philosophy in your mind that how much will I allocate where? And in this regards, I have already told you that I do not really like real estate. It is mandatory, it is necessary to have, but don't count it in your corpus. A modest amount of gold, 3 to 5% of your actual thing in physical form. Now, I hope you'll be able to appreciate why I have been keeping you away from digital gold and gold bonds and all that. So that is the way we normally should do. Finally, in the fixed fund category or the fixed fund, this thing, uh, fixed income category, we include the debt funds, we include the NREFDs, we include your any investment that you have done in the post offices and small saving schemes in name of your wife and children. We will include that certainly. And gold you can keep as separate as a store of value, even if it doesn't grow, it is good. Of course, it does grow. And any other thing, EPFs and all that are included in this. NPS by itself is a category which when you will create your portfolio, it automatically creates itself in fixed income and equity category. But decide that I am risk averse, I cannot afford more than 60% equity. Okay, fine. I like to have 75%, equally good. As you keep growing, you might be inclined, depending how much responsibilities you have, how good a risk taker you can be. Maybe you like to have more than 75% in equity. Perfectly fine. Sometimes without your doing anything, suppose you're in retirement, your equity portion might just keep growing. It just might keep growing and you would probably not know. And after 2 months, when you realize that I am already 4% more on the equity side. So at that stage, you don't have to do much as long as you are earning and your cash flow is coming from your salary and your expenses can take care of that. There is no harm. Because even though my favorite ratio between fixed income to equity is 25% in fixed income and 75% in equity, but that doesn't really mean that you have to go by the percentage. After, I would say, 2 to 3 CR at a certain stage, when you are about to quit C and you think you can, I think more than 3 CR is not required in fixed income avenues if you include everything. That is your debt fund, your PPF, and everything else. And so, even if your equity is growing, it is good because a growing equity will grow exponentially more. And of course, like I always say, investment is basically deferred consumption. So the idea is that you have to consume this and you must consume this. And it's not that only when you come to my age that you start consuming, because then you will not consume ever. You need to consume it all along. But that consumption must come from your salary, because I have only taken away 35% of your salary. 65% is still with you. So invest it. Nobody has given me 35%, okay? So the whole idea is that you have to strike a balance. Like I told you in that one of the videos which I have shared, where somebody asked me about an app to teach his children the method of financial management. So I said, first teach them that how to spend and how much to spend. So we, as grown-ups, we also should know that how much to spend and how much we can spend. And only then, as we move in life, we can increase our spendings in a certain way. I will not use the word lifestyle because that's a very cliche word. You can't increase your lifestyle by simply money. There's more to it. So this is there. Towards the last of the chapters in the book, which I sometimes feel that it is already outdated, but there are 5-6 plans that I have made for different people who are close to the retirement and maybe in retirement, like myself. So how they should manage their stuff. So I will take another 5 minutes from you about this part, because some people always say that how much tax? What about the TDS? What about different things? Yes, for knowledge sake, it is good. But do not ever consider the merit of an investment only on the basis of tax. In fact, you should be happy to pay more and more tax, because the tax will only be paid if you have made some gains. In the form of investment that we are making, there is no income, it's only gains. So if you have suppose started investing as a third officer or a fourth engineer, and after 30 years, you started off at age of 21, 22, and after 30 years at the age of 51, 52, if you are redeeming that, it is 100% possible that those laws may have changed many times in between, as it has changed in my lifetime. There was capital gains earlier, then it was off, then again there were capital gains, and again it was off. So they have gone up and down. So you cannot base your investment just on the basis of taxation. Please take it out of your mind. Whenever in between you do not complete your status and you have an income and you have to pay tax on it, please pay the tax on it. There is no getting away from it. If you can invoke your RNOR status by the virtue of being a consecutive NRI for 9 years, then it's fine. You can include that. But otherwise, pay it and get out of it. That tax which you are paying, even for not only for 1 year, even 2 years, 3 years, will be so minuscule that after 10 years you would have forgotten it. So the whole idea of my concept of financial planning is always based on reducing your taxes, but not trying to steal away from that. Axe your taxes, not avoid them. We cannot get away out of some good investment mode just because we have to pay more tax, right? But most of the people think that way. So to the people who say that how much will the tax be and how will I get a refund or how much refund I'll get, will that be a TDS? TDS is only there for non-residents and it is there in any form of investment which you make, including NRO is not even an investment, but even the interest on that is taxable, just like a resident. So when then there was one question somebody asked, I don't even know that whether he's near retirement or not, but he has asked me that how much should I withdraw? How much SWP should I create? This question we had dealt in a webinar last year, but anyway, there are always new people coming, so we should discuss this. So anything, if you cannot simplify, that means you do not understand it. So if I cannot simplify it for you, means I cannot understand the concept. My concept is very simple, that you invest the right amount till you earn. When you stop earning, you start consuming. Finished. When you stop earning, you stop investing. If you still have money lying here and there, please invest it in your equity funds. Or if your debt portion is less, invest in the fixed income funds. And now when you're ready that there is no cash flow, no income coming from anywhere, try not to have any rental incomes either, because they also add up to your income and not as capital gains. So then you start withdrawing your money. And when it comes to consuming your money for retirement or partial retirement, for people who are taking up shore jobs, you withdraw only the amount that is required for 1 or 2 months. Suppose your wife says that we need, at present moment, we need 1 lakh a month, apart from whatever this thing is there. So you withdraw about 1.5 lakh a month. But where do you withdraw from? You approach the most tax inefficient avenues before. Your FDs, which maybe you have not planned out properly and they are still in the NRE mode. So they would have become in the resident mode and they will be taxable. So start consuming from there. You should also try to move them as much as possible into the debt funds, because I'll discuss this in the next seminar or probably, not today, that just having those FDs which are taxable in the bank itself means you are paying tax on that without even consuming. So our whole idea should be to have as less amount in the FDs or other avenues as possible and start consuming from the most tax inefficient thing which exists. Tax inefficient and lower in returns, or some wrong investments which you would have made. At that stage, it is also a good time, 2 to 3 years before your retirement, to monetize your real estate which you think you had accumulated only for investment, not for consumption. That real estate you should try to sell off 2 to 3 years before your retirement. Or, I'm sorry, even after your retirement. Because if you sell it before your retirement, you will be an NRI, your TDS will be higher. So you can do it even in your retirement. And you consume that. I'm not talking about the beautiful black portion, but you need to spend that. And whatever you cannot do, the white portion, you should also try to invest in your mutual funds of different categories. And after this, when you think that your asset balancing is perfect and you need to withdraw money, you head for the equity portion. Otherwise, give as much time to your equity portion to grow. So with this particular thing, and it's been about 40 minutes since you've been listening to me. So this is a way I can repeat it. I have repeated basically what I have been saying for so many years. This is the way you should manage your SIPs. This is the way you should manage your STPs. One more thing that I would like to say, which most of you have understood, is that your SIPs or STPs should be spread in the month. This you must have understood by now, because volatility is our best friend. You have been reading in various articles and various books. So let that volatility work for you. Maybe 1 year on the first, the market was high, so the NAV at which you invested was a bit higher. It is possible in the next 29 days it may be a little lower. So you should be ready with something for your investments, right? So I don't know. This thing distracts me sometimes. Sorry. So I've finished whatever I wanted to say. You can now. I'll open the floor for any queries and questions from people. मोहित ये वीडियो बंद कर दीजिए, थोड़ा सा डिस्ट्रैक्शन हो जाता है. जिसको whoever asks a question, he can switch on your video, right? Dinesh Sharma, kindly advise on following MF. I am planning to invest now. So Dinesh, have you already started investing or not? Dinesh Sharma.
Yes, sir. So I already invested, but for the diversification, and I was researching on the value research site now, and some other site called Money Control, and I found these 3-4 new funds. So for diversification and better returns, I thought I should try this one also.
Yeah, so they are good. They're nice. GM Flexi we already discussed in the last webinar. You can always start in this. How many other funds you already have in which you're investing?
I am using this Motilal, Quant, SDFC and Kotak. These are basically mid cap, and this Kotak Contra, and these funds I am investing.
So see, if you are already investing in Kotak Contra, you do not need SBI Contra, and you probably Quant Active is large and mid cap. I would suggest that you go to Mirae Asset large and mid cap fund. Unless, because I have still not been able to develop much faith in quant funds because of a lot of reasons, and one of the main reasons is their payment system, because you have to go all around. They don't allow you to invest through their own website, which sounds sometimes a little disconcerting to me. So if you like, you can take from another ones. Mirae Asset large and mid cap is good. You can go for multi-cap if you think you do not have a multi-cap. Otherwise, if you're already having 6-7 funds, you don't need to have too many on your plate till you've crossed different...
Yes, sir, but Quant Active is, I thought, Quant Active and Invesco PSU. These are some different category of funds. So I was just trying to...
But why are you talking about PSU? I mean, why listen, if you will go back to the book, I think it's the 5th chapter, in there, there are about 8 golden rules which I have written. And in that, first was no NFO, second was no sector or sector or thematic funds. Thematic is when the fund manager wants you to invest basis one theme. So that theme may fail. This theme has failed for the biggest and the best of fund managers in the past. They have admitted it also that I failed in this. So in a diversified fund, if they fail, the performance of the fund falls. In a thematic fund or a sector fund, if the fund manager fails to address the portfolio, the whole fund may actually give you flat returns or maybe negative returns also. So whenever you invest, the categories that are available to you, in my opinion, are main categories of large cap, large and mid cap. If there are any mid and small, otherwise multi-cap, flexi-cap, small cap, and mid-cap. Right. In this category, you have a large selection, and you only need 6 to 8 funds overall. Right. So don't distract yourself too much by this. Don't just go because see, for a website, for a magazine, it is a business. They have to suggest something to you. For a AMC, it is the business. They have to bring on new funds, and those funds should actually mean something, right? Like there were a lot of questions about 5 6 months ago about defense funds. I don't understand. Suddenly, how do we start having these defense outfits in India? I mean, Mazagon Dock has reached such a high level. How many aircraft carriers are we going to build there? How is it growing? At the end of the day, any business grows by selling something, right? Isn't it? I mean, we should be able to sell it to the consumer. Then only the money will come. All these big infra companies, the infra projects are long projects. They require a lot of capex, a lot of money. When they spend, when they complete, then they will start getting the revenues. And before that, you will not get any revenue. So let's stick to the basics. Stop. If we do not have much of an idea about the daily happenings, which I think we should not have, we should have an idea about our own life, our family life, and our profession. And that is enough. Our profession is so much all-encompassing that it's difficult to keep a track. So forget about all these things, even if they give returns. See, I will admit that not today, not after the government started talking about PSU. Much before that, 3 years ago, I saw this PSU bank ETF, and it is called PSU Bank these. And I just thought that maybe the bank will do well, and I caught on to it, and I started buying, and after 6 months selling, and again buying, and again selling. I have that time. You don't have that time, and I could match that particular thing. But how much return was it giving to me? Even if I invested 5 lakhs or 10 lakhs in that, and I was getting 25% return per annum or 30% return, how much does it make a difference? The idea is to keep your money focused in form which you're familiar with, which you know that the fund manager who's handling it, you have faith in the fund manager. Don't waste your money here and there. Stick to whatever you're having, and only if your portfolio requires a revision should you opt for the new funds. Okay. We have Chief Engineer Surendra after a very long time. We've not talked for a long time. So let's hear what he wants to say. He's a very old investor, and I'm pretty sure that he has gone past his retirement purpose many times.
Not at all, sir. I'm just still trying to reach that magical figure, which is always eluding. Anyway, I just wanted I have few questions. As you said just now that before retirement, 2 3 years, you should get rid of your real estate. So I have already started that. I'm getting rid of one of my flats. So I just wanted to know what should be, now my equity allocation is about 45%. Real estate is say 35%, and 20% is debt, NREFD mostly. So I want to be little on the safer side since I'm planning to retire next year. So whatever proceeds from this real estate I will be getting, that I want to put in fixed income instrument to be on the safer side. I mean, equity, I think 45% to 50% is okay for me. I'm comfortable. I'm not comfortable much more than that. So, different avenues, if you can suggest. I've gone through a few, which is REIT, NVET. There's one called MLD, as you must be aware of. So, market linked debentures.
Hmm.
So, Anand Rathi is one of the brokers. They're giving this, and they're promising. In 5 years, the money will double. This is subject to Nifty going 34% in that 5 year period. So there is some this thing. I mean, they are selling some options, and then they are putting the remaining money in some debentures. So
Yeah, yeah.
how do you
So,
find it? First?
yeah, let me tell you one thing. See, I will certainly not suggest that you change your mode of thinking now when you are planning to retire in the near future. Which means that I will definitely not like you to change your asset allocation or asset exposure to equity. I will definitely not like you to do that. But all the same, I would also say that whatever avenues you have just marked out, even I have not taken any interest in those. Despite listening to it, I have tried to find out about that. But because the taxation of for few of them becomes very difficult. So even though I say that you should not bother about the taxation, you should only take care of the returns if it is within your reasonable reach of your what do you call risk exposure. As long as it is within your risk exposure, it is all right. So if you want a simple answer, I will suggest that you are quite far from being a senior citizen right now. So when you do become, you can invest your 30 lakhs in that if you like, complete that mode of avenue. Even though I don't like that interest which comes from there, but it's okay. Otherwise, I will suggest that you stick largely to different categories of debt funds.
Okay.
Yeah. Whatever money you get, you invest your 50%, like you said, in your equity. Take your exposure of 50% to equity by way of STP, or because you already, I have suggested to you to invest in via in debt funds. So from those debt funds only you itself you can continue investing here. And also you can take your expenses from there when you retire. And now, like if today you ask me which category of debt funds should I go for, I will certainly put, if I was earning yet still, or if I had some cash flow, I would put at least 10 to 15% in long-term debt fund.
Okay.
The word when I say long-term doesn't mean that you have to put for long-term. You can put today and take out tomorrow. But what it means is that the securities which
They
the
have.
fund manager is investing will be very long term. And these securities are largely 99% or 95%, I will say, that they will be in the government sector.
Yeah. Yes, sir.
Right. They are something like gilt fund, but different formats. And whether the government likes to do it or not, because now they may delay reducing the interest rate because of the inflation being high. But I still feel that moment the interest rates will keep going down, your returns from these debt funds in long-term category will certainly touch past double digits. They may touch very good double digits also. One of the funds, in fact, is already in the category of 11%. It is giving 11% return. Right. I mean, annualized, but it is giving that much. Right.
Which one, sir? If you can.
There are only 3-4 of them. HDFC is the one. HDFC long term.
Yeah.
So it has reached there, and these are the time like gilt. If we say directly gilt, then certainly gilt will have a little bit of volatility. So yeah, it may be having volatile. Then even the floating rates, there's a category of floating rate funds which is already past 11%, right? And long term, I will say HDFC long term for my portfolio, it is almost 9% per annum basis in a very short duration of moving. I just moved about 2 months or 3 months ago. So it's giving that much. So for your sake, I'm just exposing you to this. How you benefit in this is that your capital gains does not get taxed like your interest. So I hope this sorts out your issue.
Yeah. But so your opinion on MLD, market linked debentures?
Yeah, I've been hearing about it, but see, you should weigh your complications. How complicated is it? Do you understand that?
Yeah,
Or do you want to?
I asked him how you giving 14. He's promising
Yeah.
14.5%. Subject
Okay.
to market going 34% in 5 years time. Anytime.
See, now you tell me one thing. He's talking about market-linked debentures, which is supposed to be a fixed income category. He's saying that fixed income category should be linked to the Nifty. If I have to link myself to the Nifty, I might as well invest in the equity funds.
Correct.
And when you will retire, you will also have time, so you might as well start investing in the ETFs or whatever. Right. So the whole idea should be straightforward.
Okay.
Because so far in our 30 years of working, let's say that most of the senior people who are there are in the 50 or late 40s. So we have taken interest in understanding what this capital market is. But we haven't really understood or changed our concept about how to do things, right?
Mm-hmm.
So at this time, one very big advice which I want to give to everybody, whether you are near a point of quitting or not, that when you have time to spare, that is in retirement or pre-retirement or whatever, please do not play with your time and money. Like, a lot of people were planning, including my close friends, that when I said, what are you planning to do in your retirement? He said, I'll start investing in the market. I will start doing trading. So I said, I remembered the saying of one of my senior chief engineers, who was Italian, so his English was very halting. So he said, my friend, if you wash the face of a donkey, you lost. So I said, both engineers said, sir, water. So he said, water and? So he said, soap. So the chief engineer, he banged his head. He said, what nonsense. He lost time. He will lose time. That's the way he said that. You will lose time if you try to wash the face of a donkey. Anyway, this fourth engineer was very smart. He later went to Wharton and is a very great manager nowadays. So he said, but chief, what importance is the time to a pig? What is the interest to the donkey? I mean, so anyway, that was a joke. The point here is that you are going to ruin your time also. So at that particular time, please do not try to play with your money, play with concepts which you've never done. You have earned whole of your life in a particular format. You've understood that I will invest in this form. So stick to that and we continue. Right. Whatever returns you are getting, you've decided that this will be my allocation. Like I could have tried to convince you to make it 75%, but I will not. If you are comfortable with it, that's important.
Yeah.
Because you will yourself know whether that money is enough for you or not. Right. So be comfortable with what you do. Have faith in what you have been doing and what you plan to do. Do not try to get distracted by people's talks. If you want to try out something, by all means try out, but keep that 1 lakh, 2 lakh, 3 lakhs separate for that. Don't try to dump. When you see things are happening, yeah, okay. Give it some time, see it happening, moving up, and then you can put more if you like. But I think if you stay 50% equity, okay, it'll be fine, yeah. But you'll need a little more corpus for that. That's all.
Yeah, that's it. So best part is debt fund for debt portion.
Yeah, debt portion. We will post a number of funds on the group, and you can select few of them. Because I also like to do a little study before. Just rattling off name may not be very helpful here. But yes, like I've been in the past 2 webinars, I have told you that how liquid these debt funds are, how fast you can get the money. And you should also, at that stage, you should also try to teach your spouse exactly how to redeem in case of an emergency when you require it, right?
Right.
And before I go to Arpit for the next question, I would like to suggest one thing that I have personally seen when my daughter had to close down her account after almost 20 years, you imagine, 5 years from today, because she started off another one when she started earning. So that money came from PPF into her savings account in SBI before she could come out into the parking and start the car. It is so fast. Yeah, it is so fast. Because we only face this thing once in a lifetime. So people might tell you that you'll have to run pillar to post. But if you've done it in a bank, that's the amount of time you require. So PPF nowadays has no maturity. You can continue. If you have Moment if you give up at a good age like 50, you can always start your PPF again. It's only 7.5, 7.1%. People say it's useless, but I still feel it's a good diversification. Yeah. So we'll take a question with Arpit.
Sir, excuse me, just a small question, sir, if you don't mind.
Okay. Yeah.
My daughter is also having a PPF account, and now she is in the US, so she is in Arab. And initially, I read the news that after 30th September, whatever amount is accumulated in that PPF account, they will not give any interest on that. So I could not actually figure out. I read the news, but do you have any idea about it, or should I withdraw?
Okay. Let me find out about this, because see, what comes on the news or what comes on the different blogs and websites is not important. What is important is that it should come as an official notification. So let's wait for the official notification. If it is that way, we will stop it. If she is in US, I also wish to inform you that if she is in US, she will not be able to invest in quite a number of mutual funds either.
Correct.
Because then that you become FATCA positive. For everything, you'll have to say that I am staying in US. So a lot of funds, even HDFC never used to accept that. But I'll give you the list of the funds which accept
Okay, sir. That would
funds.
be
Right?
very good.
Yeah. Right.
Okay,
So,
sir.
Arpit, you want to come?
Good evening, sir, and good evening,
Good
everyone.
evening. Boliye.
I have a question, sir.
Hello.
Like what you have taught us till now on the group, keep your major corpus in the equity funds and keep immediate next 2 or 3 years of expenses in the debt funds. So with that, then you are able to rely on the returns from the debt funds. They are not that volatile with the markets. So for near term goals, then we can take money out every year from the debt funds, and equity meanwhile will grow.
Yeah. Yes.
So sir, इससे तो ये 3 साल, once these 3 years are over, then these debt funds will get consumed. So should I continuously at the same time keep taking money out of equity funds and transferring it to debt funds also?
Abhi, see, this is exactly where we started off the webinar. So the point here, which when I said debt fund management, this is what I meant. Debt fund management can be only to service your STP, right? Debt fund management can also be to park your fixed income category. Like for me, for major part of my life, the fixed income category, apart from PPF and very small amount in NREFD, used to be debt funds only. आप समझ रहे हैं? मतलब जब मैंने छोड़ा होगा शिपिंग, तो about 25% of my fixed income, out of the 25, at least 20% was in debt funds only. Even today, my 19% is in debt funds, and it says 6% in others, but I am in that range. So I may not have said that you put only the amount that is required for next 2-3 years. This probably you are talking about the time when we retire or while you are working. Which one?
Yes, sir. When we retire.
When you retire. See, you will require to have much more than that. Because when we say 25% in fixed income and 75% in equity. So in fixed income, which avenues will you select? You will select FDs, you will select, and like we say, you can select up to, let's say, 1 CR, because 1 CR at 7% will have about 7 lakhs as income. So you can claim it as your, I don't know if you can claim that much amount as your income or not, but that's what is there, because only 25% of your 25,000 is exempted in the FD interest. But if your income, you don't have any other source of income, it is possible that you can get away with the taxation in the FDs. But what other avenues will you select? You would definitely not have had a corpus in your own PPF. Maybe you have a corpus in your wife's PPF. So the question here is that
Yes, sir.
I have always asked you, first thing, that please invest at least 35% of your annual salary spread across 12 months in equity funds. right?
Yes, sir.
I have only asked you to do that much minimum. If you can invest more than that in equity, it's fine. Now, what do you intend to do with 65% of it? With the 65% of a tax-free salary, which you have been getting, hopefully, it's a tax-free all around. Apart from making your expenses, what would you have done? I doubt that you would have been able to spend more than 40% of that 65%. That means even if you spend 40% of that amount, let's say you earn 50 lakhs. 50 lakhs का 35% कितना हो गया? 17 lakhs.
17 and a half.
More or less.
Yeah.
17 मान लो. अभी आपके हो गए 33.
हाँ.
33 में से आपका एनुअल एक्सपेंसेस कितने आ जाएंगे? Let's say 24.
Sir, maximum 20 for a
24 मान लो. आज की डेट में 24 मान लो. 2 लाख रुपए महीने के मान लो. 9 लाख का क्या करोगे? कहीं तो डालोगे. कहाँ इन्वेस्ट करोगे उसको?
Yes, sir.
या तो
Sir, I am fortunate enough to have 2 daughters, so I have 2 Sukanya Samriddhi accounts for both.
Perfect.
One
Perfect.
each.
Perfect.
And I have a PPF for my wife. So
Correct.
1.5 every year is going to.
So 4.5 gone there. Still you have 4.5.
Yes, sir.
Right.
Yes, sir.
So that amount basically over a period, you see, we are only talking about 1 year, but if you consider this 1 year, you will need to put this money somewhere. And 50 lakhs is also not your total salary. It will be much more. Right.
Of course.
It will keep growing as long as things are happening the way they are happening. Even if there is no raise increase, I'm going to ask this question also to you also. That what is the salary nowadays actually? You will tell me that there is increase, but I don't see it. So that money also it is going into some fixed income. So which fixed income portion will you put? FD, PPF, Sukanya, and where? You will have to choose some
So
avenue.
there is nothing else.
And like we discussed with CPA Surendra, so somewhere you will have to invest that. So you will slowly have to get into the habit of investing in the debt funds. There is a possibility in between. One category of a debt fund may not give you great returns, only 5-6%. But you should be happy in the fact that you are not having to pay an annual tax on that, which you would have to pay in case it was a fixed deposit in a bank or a company fixed deposit, right? Incidentally, company fixed deposits are not allowed for non-residents. So the idea is that first thing that I think you got me wrong when I said keep 2-3 years in debt funds. What I meant to say was that from whatever you wish to keep as an emergency corpus, you can best keep it in the debt funds rather than keep it in the FD. This is what I may have said, that if you need to put 2-3 years of expenses, you should put there. Otherwise, the asset allocation which we have been talking all the while, whatever is a percentage in equity that you decide, like Chief Engineer said, I'm happy with only 40 to 50% in equity or 55%. So whatever you are happy with, you put that much in equity, let it grow in that way, and remaining you have to find a efficient fixed income avenue. I am not saying debt funds are the best, but yes, for me, they have worked the best. Also because of the reason that they are simple to operate and to have your money in. Is that okay?
Yes, sir. Understood. Sir, debt funds, like in equity funds, it is very clear. Like you said, ki one large cap, one mid cap, one small cap, one flexi cap. And then you said if you want one value also.
Yeah. Now we can change that also.
Debt, it is quite mixed up, sir.
Yeah. No. Here also. See, there was a time when I wanted people to start investing. So I also had to play safe, So I said one large cap. But today when people are there and they are understanding things, I would say now you can reduce your allocation directly to large cap and go into flexi cap or multi cap, right? Or large and mid cap. If you will check the categories, you are getting little more in the large and mid cap. So it's okay. I mean, I understand today our large cap category is slightly undervalued. Mid cap category and small cap category a little higher. But when we are talking about 5 to 10, 15 years, the returns definitely will be bolstered up. So like that, today the categories of debt funds are not very clear to you, which I will try to endeavor to make it a little more clearer in future webinars so that people can take their own calls. It is a difficult thing. Yes, even my own distributor, Pankaj, he says that it is not easy for them to select. And I had asked him about this long term, and he had asked 2 or 3 fund managers directly because he has a contact with them. And they said the time for long term has still not come. Despite that, I put money in long term, and I'm happy with it. So the people who were supposed to manage it, they themselves are saying that wait, because probably they want that money to go into equity. But I said no, I'll do it. I did it. So these are chances that we have to take as a educated guess, you can say. But remember always that different category of the debt funds, when compared with the FDs, bank FDs of similar tenure, will always give you a few percentage points more than the bank FDs, minus the taxation issues which they, of course, hold, right?
Yes, sir.
Okay. So we have Nikhil. Next one. Hi,
Sir,
Nikhil.
yes, hello, sir.
Hi.
Sir, during your meeting, you discussed some plans when a person is close to the retirements.
Hmm.
So that 3-4 plans, what you are saying about. So if you can share, or maybe you have been already discussed in the group, or maybe I have missed out that plans. Like how to deal, same thing, like how you are going to withdraw all these things, because we are investing since long time, and many people will be there, like who will be close to retirements. So if these plans you can share again, then it would be very helpful to us, sir.
No, we touched upon this today also.
Yes, sir.
We said that first you manage your most tax inefficient thing. If you have seen right from beginning today, I have been laying stress on making you yourself empowered to take your decisions. So अब आपका अपना पोर्टफोलियो आपने देखा कि भाई अब हम रिटायर होने वाले हैं, इसमें से हमें क्या क्या करना है. तो सबसे पहले तो जो कचरा है उससे अपना हेडेक निकालो. अगर आपका जो कोई रियल एस्टेट था, आपको उससे रिटर्न मतलब कुछ नहीं करना, यू नॉट कंज्यूमिंग इट, so then might as well monetize it, because by now you would have realized that real estate returns, maybe in short term they may give you flashy returns, but over a period of time they cannot outsmart, right? So you will need to, at least for the reducing the headache, you need to monetize it, sell it and invest, right? After that you will need to get rid of your basic things which are tax inefficient or giving you less returns. You'll use that. But when we talk about the asset allocation which you have made in the fixed income, let's call it or not call it debt funds, and the equity funds, now you yourself will be able to see that now my asset allocation, because the equity market is down, the debt is little higher and equity has suppressed. So at such time, when equity itself is low, why would you sell equity? You will consume little bit from your debt. And in a matter of maybe a few months or a year, equity will start performing better, and again your percentage might be reached which you have decided in your mind. This concept of asset allocation will be very important. Keep that equity portion in your mind as very clear, and after that you can consume from other things, right? And the question of how much is a little more than you need for this month, right? I have already discussed in the last webinar that I needed a large amount of money this particular year because I was planning to build a farmhouse kind of a thing. So now I knew that the elections are coming, the market can go either way. So what I did was I started a STP from equity to debt. I knew I was paying capital gains, but I said that amount of risk management I have to do. So every day I was transferring 1 lakh into the debt funds, and I continued for about 1.5 to 2 months. And in between, of course, when the market collapsed, so it didn't. For 1 or 2 days, I got a good handsome return from that also. So it is a self-taught exercise. It is there's no rule for it. The main thing is that I would like to remind you about that story of the golden goose. Remember, this I have repeated in a lot of different parts of my life to different people. The fact is, you should appreciate that whole of your life what you have done is you have patterned this golden goose, right? और ये जो मुर्गी है ये रोज सोने का एक अंडा देती है. और आपको कुछ भी करना है, इस मुर्गी को नहीं मारना है, राइट? सो वो अपना रोज एक अंडा देगी हर मंथ का, लेट्स कॉल इट SWP और लेट्स कॉल इट फिक्स इनकम रिमूवल फ्रॉम देयर, वो आप करते जाओ. Don't depend on any one fund to do it. Even when you start touching your equity, like now I have started touching my equity. Even in equity, you don't have to be fixed like I have to withdraw from this. See which one is performing worst. Start withdrawing from that. So this is the way, this is the basic plans, that towards our retirement and past our retirement, we should try to make ourselves mentally free so that we are able to devote ourselves to the family, to the wife. By now your children would have been married and gone. So you should be able to do things which you were not able to do. One thing I need to warn you before, that those who think that your expenses in retirement will go down or the expenses after coming back, giving up sea life will go down, are sadly mistaken. Your expenses will go up multifold for the simple reason because when you were on board, at least for those 6 to 7 months, you were not spending anything. But now you have that freedom. You have that time, there is no limit. So your expenses will automatically go up, but you are already prepared for that. You have already collected a good amount. Your golden goose is already fat. Now, if you want, you can take one golden egg a day. If you want, you can take 2 also. Right. In case of a hen, it's not a carryover, but here it is a carryover. Right? Is it okay?
Right, sir. Thank you, sir. Thank you very much.
Right. Preetam? Hi. गुड इवनिंग. हाँ बताइए. जी जी, थोड़ा सा क्लियर नहीं आ रहा आपका, थोड़ा सा क्लियर नहीं है, पता नहीं. हाँ.
Sir, am I audible now?
Yeah, perfect. Now it is perfect. Yeah.
Yes, sir. That I was talking about, sir. As Pankaj sir is also there, sir. Why don't we need a distributor, sir? Those who are in mid of the building corpus or those who have already built the corpus?
See, now the thing is that when I am on a public platform,
Right.
I cannot tell people when the option to invest directly exists. I cannot say that please use a distributor, without that life is impossible. But I know for myself that my life is impossible without Pankaj. We have been together for 22 years and he has helped me in so many ways of life apart from this finances only. He was de facto the person when you are on board. You need a person, you need a helping hand. Your own family, your own siblings are gone. But that is one aspect. Now, second thing is, when we invest in a direct mode, you are dependent upon the recommendation of a person like me. That whatever he says or whatever is displayed on the value research, whatever is displayed on other sites or ET Money, that we will buy. And it's not very difficult. Once your KYC is done, you can buy.
Right, sir.
But the main thing is that discussion opens up a lot of things. I'm not saying all distributors are the same, but a distributor is an essential link between the consumer, which is the investor in this case, and the service provider, which is the fund. So many times it has happened. It is unethical, I know. It may be unethical, but he has warned me almost 6 months to 1 year in advance that, sir, stop investing in this fund. In 2010, I don't know what happened afterwards, but we were going very nicely on, let's name it, Sundaram Mid Caps, Select Mid Cap. So I said, sir, ये करने नहीं वाला अच्छा. I didn't question him twice. I stopped my investment in that. And as I saw the returns falling in the next 2 years, I exited that. One thing which I never listened to him, which he was telling me right from the beginning, that is 2004, he was wanting me to invest in ICICI Dynamic Fund. And for some reason, I never wanted to listen to him. Today, it is called ICICI Multi-Asset Fund. And you know that I am telling everybody now to invest in that. Right? So these people, these distributors, because they are in constant touch, they are taken by, now of course it has stopped, but they were taken by AMCs for seminars. Like we are taken to seminars to Bombay and all that. We are called for seminars to discuss the internals. So they are also called by different different AMCs. So that information cannot be made available to the consumer directly. Right? They tell that, okay, we made a purchase in this fund, we are making a purchase in that fund, we bought so many stocks for this. They do discuss with these people for whatever reasons. I don't know if it is ethical or not ethical, but they do. The people have information.
Yes,
So
sir,
that is
what
your
like,
answer.
even like from the same, your platform only, Fen Group, that Axis and Quant has alerted.
Exactly. Yeah.
Right. So
Before that, 3-4 years ago, Franklin also.
yes,
In
sir.
Franklin, ultra short-term fund,
Yeah.
Pankaj used to always tell me, sir, don't go for the returns. This AMC is not good. But I never used to listen to him. And it so happened that when I listened to him and I told all of you, Franklin, after that, only suffered that debacle. But of course, it came out very nicely out of it. It has strengthened the mutual fund industry. But it is because of people like him.
Right, sir.
Right.
So basically, that is what my question was. That, sir, still, like even out of 10 messages, 6 messages are even you are also saying that go for the direct, don't go for the distributor. So that is what my like it is the concern that
I have never said don't go for the distributor. But when a new investor is investing, I tell him you go here CAMS to CAMS or KFinTech or to the AMC house nearest to your home, because see, I have to give him that option. Sometimes when people are from okay cities, I tell them that try to find a distributor around your house.
Right, sir.
I can go on Google and say, see, there are so many distributors around your house, you can go to anybody, but I don't know them.
Right, sir.
So going to a distributor and starting your investment in the first place, the very next day, is very important.
Right, sir.
It doesn't matter, like I said in the beginning of this webinar, it does not matter whether you invest from a savings account, it does not matter whether you invest from an RO account. Important is invest, start investing.
Exactly, sir. Exactly.
Right.
So,
Okay,
sir, but thing is that like, okay, you are fortunate enough that you got the Pankaj sir, and you have also a very sound knowledge on this. But for us, for many of us, those who are not so much so depth in the mutual funds, because whatever they can start recommending, then we will be blindly opting for it.
No,
Then
this is what happens. See, this is the whole idea of having a group. Like somebody else yesterday, he wrote directly to me. He's a novice. He's just about to start. He said, "Can you still on board?" He said, "One person near my house has recommended these funds, and he has given 4 sector funds of ICICI and 4 funds of HDFC. Out of the 4 HDFC funds, he can take 2 easily." But now what happens is, I told him, I said, "You definitely go for the distributor." But whatever funds he recommends, you discuss on the group so that we can give our opinion.
Okay.
There was no reason for a new person who's starting investment to start investing in a sector fund.
Exactly.
Maybe after later on he can, when he's mature and he can see things, but otherwise not. So we will discuss that here. But at least as a person, I think I would like to go back to the older time when people had somebody. They had a team, to advise us.
Okay.
Right?
So
Earlier there used to be banks who used to give a very positive service. Axis Bank used to give a very positive service. If you just invested little amount also, they used to get a weekly, upgrade on that, on quarterly updates on that. But now they are charging per transaction and this and that. And plus, you see, the whole concept of banking has changed now. The relationship manager is today there and tomorrow he's there with another bank. So I can't say the same thing about banks, but a distributor is a person, he's a link, right?
yes, sir. And sir, in the last webinar, there is one fund which you have discussed, Grow Total Market Index Fund.
Correct.
Is there any other alternative of this? Means like any other mutual fund house?
So far only this has come, and I also saw it very accidentally because it was not very publicized either. which we can understand because they are not allowed too much of expenses in case of an index fund. But today it is not. And
Okay.
I said, I have told everybody,
Okay, because the way the grow has some, in between of the years, they have some controversy because of some fund and
that's
all.
why mutual fund has recently started. It has recently diversified into mutual funds. It's not an old AMC. It's not a very old thing. So actually, it does not come up to the level of lot of my parameters. Neither it is a very old fund, neither it is a very old AMC. The AUM is very less. But I said this is something new concept which has come. Start with 5,000 a month or 10,000 a month and see where it goes. And I always walk the talk. I'm already doing it on my own. And I'll give you an example. This Friday, most of the market different. Large Nifty 50, 1.35%. Another next Nifty was 1.3%. Mid cap was another 1.27%. Small cap top 50 or something like that. But when you see at the bottom, you will see the total market index has fallen only 1%.
Right, sir.
So the idea is like, let's see where it goes. Maybe our concept was not well established that time. We might come to know after 10 years. But if it does, and all the other AMCs start issuing index funds like this, so at least we will have the advantage of having experience. Maybe not a great corpus, but at least a good experience we will have, right?
Okay.
So right from top, I think Manish was still on, please.
Good evening,
Yeah.
sir.
Good evening.
Yesterday I have on last Saturday I have posted my query regarding this reliability of mutual fund houses.
Hmm.
Say earlier one fund house was there named Reliance Capital.
Hmm.
Its owner was Anil Ambani.
Hmm.
So it might be having some index funds as well as active funds as well as passive funds. So say that Anil Ambani has got bankrupt and he was about to go to jail also in 2D spectrum this scam.
Let's ask the question.
Yeah.
Yeah, just
So
a simple question
if
only.
he completely get destroyed, the owner.
Hmm.
So does it affect the mutual fund, and does mutual fund act as a company?
This is the question, right? This is the question, and this is exactly what I was looking forward to. Yes, and I had collected some information about this. Now, Manish and myself, we get together that we have adequate knowledge and let us start a mutual fund,
Yes, sir.
right? So now we become the sponsors. Rajiv and Manish are the sponsors,
Yes.
right?
Yes.
And now both of us go and form a trust.
Yes, sir.
And we appoint the board of trustees, just like you have charitable trust and another trust. Now, a similar trust, I will tell you after about a month that I'm working on for all of you. Right? So, this is going to be a very interesting thing for you to plan in your personal finances. Nothing to do with me, but individually, all of you can. So, now we form a board of, we form a trust and it should have trustees. So, we nominate the trustees. We can also be part of the two trustees, or we can select our family members, or we can select some professionals from other fields on a paid basis to do this. Now they become the trustees. We are sponsors and trustees. Now we form a AMC, right?
Yes.
And with all this, we started with a seed money. Seed money can be anything, 1 crore minimum to anything else. Most of these funds were started with a seed money of 1 crore.
Yeah.
Now, if you will try to understand, try to recall, HDFC Mutual Fund and HDFC Bank and HDFC Life Insurance and HDFC General Insurance or Ergo and HDFC something. Similarly, ICICI Bank and AMC and all these, aren't they? Don't you find that they're connected somewhere?
No,
So
they are different companies.
who's who? Yeah, but who's who? It is possible that HDFC was along with ICICI Bank, along with ICICI Securities, was the sponsor of this mutual fund.
Yeah.
Correct? Do you know the name of him? No. Right? You don't know his name. You understand? There is HDFC financial or securities. There is HDFC Securities also, but they do not have anything to do with the AMC. Maybe they have given 1 crore of seed money, but they have given trustees. They have formed the trust, which does a particular job, who have formed the AMC, and now AMC says, okay, we will start with 4 funds, 2 debt, 1 equity, and 1 index fund, like maybe Grow or some other. And they start issuing a NFO, new fund offer, and they start collecting the money. And they start buying securities. With the debt fund, they buy debt. With equity, they buy equity. And we continue, and this is how the mutual fund is formed. Then the second people are the custodians. It is responsible for holding and safeguarding the mutual fund units, right? Because units are nothing but a collection of the actual stocks or the debt papers, right? So they are the custodians. And then we have the RTA, CAMS and these people. So this is the entire series: sponsor, trustee, AMC, custodian, RTA. 5 people. Now, in this picture, do you see Rajiv and Manish anywhere?
No.
If we go bankrupt, what is at stake? 1 crore, right? Now, it is a different matter that tomorrow when our AMC start doing very well, we take it public. Like HDFC is public, SBI mutual fund or AMC is public. Similarly, other companies, they are public. That is a different matter. That whether AMC, that particular company, how well it is doing, what is the share price is not a matter. A mutual fund cannot invest in its own holding company also. So the point is that Nippon Mutual Fund was not closed down. Reliance was not closed down. They had to look for a buyer. Who bought their business? What was the business? The business was the complete AUM of the company plus certain premium, the embedded value of the company, which was decided between Reliance and Nippon that how much is that value. But that AUM was intact. On the date when the transfer of business was signed between them, the AUM was intact. The name of the people was intact. Nothing will change. This is where SEBI is supposed to come in. Till date, nobody's single unit has got unaccounted for, let's call it that way. Most of the foreign AMCs which came to India closed shop within 1 or 2, 5 years and they went back. Like DSP was with ML, Merrill Lynch. Then it became with BlackRock. Now it is only DSP. BlackRock is separate. And there was one of the biggest, Goldman Sachs. It closed down before it even opened shop because the rules in India are so tight and difficult. They are so regulated that it is impossible to do what you want. And the foreign AMCs cannot do that. So one thing that I have learned in these years and from different sources and this thing is that a mutual fund company cannot junk its investors. Its investors are their units, their schemes are always safe. The best example which we just talked about was Franklin Templeton. When they saw 6 of their important debt funds floundering, ultra short term and liquid fund and all that, they just closed those funds for fresh entry and exit. Because they did not want some people to take advantage of the small investors and run away by redeeming their units. Right, because as soon as somebody redeems the units, definitely the NAV falls because they have to pay them somewhere. So no company, never in India, AMC has suffered so far. What happens in the future, we don't know. L&T, one of the very good companies, L&T Finance, L&T AMC, when they found that they cannot run their business, they looked for a buyer. Whom did they get? HSBC. Now HSBC funds themselves were not doing so great. So now it will depend that who takes over the company. You will have to check it out again, which all funds they took over from L&T and how they are doing now. So similarly, when Nippon took over Reliance, the funds which were doing well before continued to do well with most of the funds. And of course, in between, SEBI came with reclassification. So you don't have to be worried at all. Whatever happens due to market is different, but AMC cannot run with your money even if the promoter's intentions are bad or the sponsor's intentions are bad. Does that answer your question?
Yeah, no. Actually, my question answer is incomplete. So it is partially what I'm asking that say I have invested in a company, say Nippon India, and I have gone on board. Now, after I have boarded means the vessel, the something has gone wrong with the Nippon India, and now because something has gone wrong, it's AMC means it's NAV prices has started coming down. Now, how should I react? Should I means feel that means it will come back, so I should buy more, or should I means exit from the fund?
भाई देखो ऐसा है अगर if you are saying that something is wrong happening at Nippon India and then the NAV is coming down, that cannot happen. If Nippon India is a listed company and something wrong is happening, then its share price may come down. But the schemes are products. Their NAV will only come down if the stocks in India are not doing so well.
But why people were exiting from the quant when the front running case has come?
Because they did not trust quant. They were running with them as long as the returns were okay, but these people were not stupid. They were watching that the best scheme of quant, which was small cap, was not doing well from February end. They continued with them for 2-3 months, like I continued, and I invested because of you people only. So when I got the news first time of front running, I said sell and run. Because as it is, the returns from March to June were quite less. So when on 5th or 6th of June, just after the elections, this thing happened, I said, let's not do it, because most of you had invested in quant outside my advice. We never believed in this because it was going very round and round. And the worst thing for quant which happened with me was when I heard that they had not paid KFinTech the fee which they are supposed to pay annually. And they had given the notification, KFinTech had given the notification that they have not paid us, so we will not be handling the business. This was the biggest point. This happened about a year ago, but it happened nonetheless. It has never happened for any AMC. So people, they understand. It is not always that they are stupid. Of course, it is not that the value of quant has gone down. They still have a good AUM and it is continuing. But we like to play safe. We will take our decisions. Is that okay?
But sir, you told means in last webinar that means in UTI mutual fund price has come down. Means NAV has come down from 65 to 0.65.
Yes. That was an exception. It happened when UTI was still a government AMC. It was the first unit mutual fund company which was formed, I think, in 58 or 59. And in 64, they brought out this scheme. So their working was different from the mutual funds which are happening today. UTI prior to 2000 was different than UTI the way it is performing today. The services may be good or bad today or same as UTI before, but it is a different. But I still don't invest in that because I am still biased. But that UTI was strictly under the government. Like SBI mutual fund was also. But now SBI mutual fund strictly follows the SEBI dictum. You see, SEBI also came around and became a little more powerful after 99. Earlier, they did not have any powers. So that UTI was different. Different in the sense of spirit. Name was same. But like I have told you so many times that I don't really follow what the government does, neither the schemes or whatever. So I try to keep away. So such things, whenever something like this happen, yes, it affects the market, it affects the sentiment, but the industry becomes stronger. The rules become stronger. So when something like that happens, we will definitely, like we have been doing in the past, we will definitely tell each other and we will need to take action. And as you say that when I am on board and something has to be done, for this reason I say that always keep your family, your wife educated about it so that at least she can redeem. If she can be a second holder, that's very good. But at least if you cannot do it on board because of no good net facilities, at least your wife can do it. Is that okay?
But sir, should we means confirm now that means even if something goes wrong with the AMC, like Quanta has caught in the this front running case, then also whatever the means investment we have made in say flexi cap mutual fund or mid cap mutual fund, they are safe and its NAV will not come down if something goes wrong with the Quant also. If even Quant is closing down tomorrow.
See, if, like I have said again, whatever is the product is backed by the securities. Those securities are strictly monitored. Not only the securities, the transaction of the securities is strictly monitored by SEBI. That time when everybody wanted to redeem from Quant, we were getting alerts from KFintech that because of KYC reject, your redemption has been kept on hold. But nonetheless, the money came back in time from Quant. Right?
Yeah.
So what happens tomorrow, we cannot say. I am not a spokesperson for the industry. I am somebody who can guide you and keep looking on the watch, like we do a watch on the deck and watch in the engine room. I can only be on the watch and keep informing you that this has happened. So please stay away from that. Why do you think I always tell you not to go for these sector funds or not to go for certain type of AMCs? Why have I not taken the name of all the other good AMCs which have started off? We were having discussion about this White Oak, and we know that it is headed by a very great fund manager who was there with IDFC. But it's a different business to gain that trust. Moment he left IDFC, we don't know what he is now, what his attitude is. So we cannot really start following a new fund. That's why we say we'll go with the established ones. And I've given you the names of all these 15 AMCs. Invest in any of them because they have been around for at least 15, 20 years.
Yes.
Am I right?
Yes, sir.
That's all I can say. Nobody can stand guarantee for other people. Mr. Seeker, his hand has been there for a long time. Let's do with that. सुरेंद्र जी आपसे बाद में कर लेते हैं एक बार जरा इनका स्पीकर का देख लेते हैं हाँ जी बताइए सर
So just I wanted to know, I think if you have discussed this, then you can escape that. Is it the fund become less attractive if that AUM goes more and more up, like SDFC FlexiCap, Parag Parikh FlexiCap, or SDFC Balance Advantage?
Yeah, there are some people who are senior enough and are on the group even now, right now they're listening, and they feel that it does affect, but I don't feel. Yes, I have been informed by the fund manager of a small cap fund, which has grown past 28,000 crore now. And he had told me 3 years ago that you should not invest in a small cap fund, which is more than 10,000 crore. And this fund manager, even today, he is very jittery because he doesn't have many stocks to buy despite having all the money. Because he said there are no reliable stocks out there to buy for this much money, which I have. So for a small cap, it can be said. Up to some extent, for a mid cap also, it can be said. Right. But when we talk about flexi cap or a multi cap, I would rather say for a flexi cap, let us leave it to the fund manager and see his returns. Don't see his returns by point decimal returns, but again, same, top quartile. Is he able to deliver in top quartile? See, हमारा जो benchmark है वो होना चाहिए कि हमारा जो जीडीपी है और जो इन्फ्लेशन है उससे ऊपर कोई रिटर्न दे दे. स्टॉक मार्केट की रिटर्न हमेशा इतनी होती है एज जो गुरुजन हमारे हैं वो लोग बताते हैं. स्टॉक मार्केट ओनली गिव्स द रिटर्न व्हिच इज इक्वल टू योर जीडीपी ग्रोथ which is like say 7% now and the inflation which is 6% now, so 13. The market, the broad index Nifty 50 will grow at 13%. It doesn't say about the next 50. It doesn't say about the mid cap or the small cap, but this broad market. So we need to look more than this. Let our expectation be a little more than this. So if we're going to keep a large cap heavy, we're going to be conservatively like in that category. So AUM has no direct correlation with the returns. I don't really agree with that because if he's going to have more money, how much cash is he having? Is he waiting to buy something? Right. So if in this category he's fully invested, like our Parag Parikh, he's mostly invested and they only keep about 3% in the cash. That is to buy more if the opportunity arises and also to meet the redemptions in case there are redemptions due to bad news. So there, I have not found these returns so drastic as such. Like people might quote me about HDFC FlexiCap again under Prashant Jain. Now that the 3 years when his HDFC FlexiCap, which was known as HDFC Equity, did not give good return was because he was overtly dependent on your PSU. Now again, You see, he has always been singing the praises of PSUs. And we did not agree with him, I myself. So after those 3 years, I started exiting in a phased manner from HDFC Equity. Now, NAV of that was not going down because of the large AUM, which was 38,000 crores that time, rather because of his the selection of stocks which he had made was not doing well. But in the very next year, that is 22 or 21, his stocks did very well, and the NAV came back, and it made good for the previous 5 years. Forget 2 years, 3 years. So it became all right. So after that, I gave up this idea that AUM may affect. This is my personal opinion. I may be proven wrong in future. Yeah. Ankit.
Hello, good evening, sir. Currently,
Hi,
I'm
good
on
evening.
board, but I'm very lucky to have this good internet connection.
That's very nice. Yeah.
This webinar. Sir, I have just started, I think, in last December itself, investing in mutual funds and all. I think I was the one who called you just before joining. I was having this trouble with KYC, but eventually, when I was on board, KYC, everything got sorted. And then, as usual, it happens with the new guys when we start. I was just looking after the returns and investing left, right, center, and right now I have invested close to around 34 lakhs in mutual funds. Now, right now, I'm trying to just streamline my SIPs. I'm able to do around 3 lakhs of SIP. So my question was, suppose I select this mid caps. Suppose 1 lakh I give for mid cap, 1 lakh for small cap, and 1 lakh for flexi cap. So in these, suppose is it advisable to, like, suppose 1 lakh I'm investing in flexi cap. So I put 50,000 in Parag Parikh and 50,000 in HDFC, or maybe suppose I select 3 funds in flexi cap. Is it advisable to do like that, or I just go with one fund itself?
I would think that you can go with 2 flexi caps or 1 flexi cap and 1 multi cap, right? And 1 mid cap, 2 small caps with a lower allocation. I am not saying you keep same allocation. You should always have a higher allocation to the flexi cap and large cap categories towards the large cap categories. These we call large cap categories only because most of them like to fill their folio with the large cap funds to keep it safe. One fund which you can, because you have just started, you can also keep in value or contra, right?
So I have invested around close to 1 lakh rupees in this SBI contra, and value, I think ICICI Prudential, I think I am there in that.
Yeah, contra and value is like the themes are almost similar. They buy stocks which are out of favor and they wait for them to do well. So sometimes when the market is not doing so great, your fund may do well. So if you will follow this, your net portfolio would perhaps be in line. Like you will have about 50% to the large caps, or 30% to the mid cap, and 20% to the small caps. So it will be called an aggressive kind of a portfolio. That's what I would think. In fact, if you just invested in 1 flexi cap and 1 multi cap, even that would do the job. Even that will give you approximately this allocation. But the fact that we are not in a, what you call, gazing into a crystal ball, and we like to diversify in manner of the market cap also, and we like to diversify in the manner of fund selection also. Like something happens to one particular fund for whatever reasons, and its performance suffers, so we do get dejected. Because at this time when I talking about HDFC Equity, which is now flexi cap, at this time, even post-retirement, my exposure had gone beyond 1.25 in just one fund. So I really didn't know how to react. For 3 years, it was consistently giving 0 returns. And that coming from a fund of Prashant Jain, who was like a god to me, who is. I mean, I like his theories. So, and it becomes very difficult, very disconcerting when you're retired that 25% of exposure is going so bad. So that's why we like to have 4, 5 funds or 6 funds. So we do a little bit like this, but don't give equal allocation to mid cap and small cap and large cap. You have 2 flexi caps, like I said, or 1 flexi, 1 multi, 1 mid, small, 1 contra. That should be good. And 1, if they are taking fresh subscription, you can take in S&P 500, Motilal Oswal. So it gives you overall a very balanced portfolio. and we see for another 1 year how it moves. Right?
Okay. And this regarding this selecting this multi-cap, because I think these are relatively new funds, so I'm not able to find some good funds.
Yeah, actually, they are new funds. Some of them have got rephrased. In 2018 June, they gave the Security and Exchange Board of India. It gave them the time limit of up to June 18, and they said that re-Christian your funds, reform. You have to define what your fund means, and you have to name it correctly so that people understand. So that is why this another category of multi-cap came, and flexi-cap had vanished. It wasn't there. Then later on, the industry went again to SEBI that you can't do this. You have already tied us up with 25 in multi-cap. Let us have flexi-cap. So SEBI again came, okay, you can have flexi-cap. And then the older flexi-cap funds, which were the flexi-cap without saying so, like HDFC Equity was a flexi-cap fund. Effectively, it was my first fund. And now I realize that I was always investing in that. So it gave a good return. Is it okay?
Okay,
Right.
Okay,
Anybody else? Seeker is there again. Yes, please.
Sir, I just want to know, apart from mutual funds, can you suggest something else? Like, will you suggest something to diversify, like corporate bonds or something else?
Corporate bonds, if you are talking about bonds, in terms of buying bonds, it is a different matter. Then you have to look for people who give you information and provide you the platform to buy this, just like stocks. But there is a category in mutual fund, debt funds, which is called corporate bond fund. It is also called credit risk funds. So they are the same funds. You can actually invest in them, and there is a particular period, they return you about 7 to 8%. So that is a debt fund or fixed income fund category. So I have largely kept myself restricted to the mutual funds instead of buying it. Like in the beginning only, I said that buying bonds directly is almost same as buying stocks directly, because you have to have knowledge about both of them. Taxation wise, yes, there is an advantage in buying bonds directly because it's about 10% and 20% taxation difference. Okay.
How much return can we expect from credit risk fund?
Okay, credit risk funds. Just a moment. I'll tell you my returns because I have always had a kind of a mix of all kind of things. So ICICI has given me about 7.6 in 4 years, and HDFC has given me 7.2% in 4 years. And I have stuck with these two because of my distributor, who says that your debt money should remain with the major big AMC houses. That's the reason I always loved DSP also, and Franklin also, and SBI also. In a debt category or fixed income category, you should not select the fund by the returns, but you should also see what is its portfolio. The security should either have the backing of the government, that is, they should be government bond papers, RBI bonds, or it should have AAA rating of private company bonds. Right? Means they should have the highest quality of papers. So naturally, when you go for the highest safety, the returns will be a little less. Right? Is it okay? Suren ji, aap boliye.
Just one small question, last question. If private family trust,
पकड़ लिया आपने पकड़ लिया मुझे. इसके बारे में 1 महीने बाद बात करेंगे. I am still doing a research on that. I'm going to have a full kind of a presentation thing. I will not come alone. I will try to get somebody with me, and before that, if you like, you can find these videos. If you want, I can share them also on YouTube. This is something very good that I have been asking some knowledgeable people, and they were always discouraging me. But I feel that they did not know about this private family trust, private trusts. They were talking in general in terms of trusts. It is
Yeah,
something
it's-
very good to have, and all of you are requested to read upon it. If you are on board, if you can download these videos somewhere, you can just get together, collect the data, and download, and everybody can watch. It is something very good to do it, and I
Yes.
feel even better than making your will is to make a private family trust. So,
Correct, sir.
Surenji, thank you so much. Thank you for letting out the secret.
No,
I
it's
would
not
have
a
come
secret.
after 1 month.
just-
I would have wanted some time. Yeah.
I started the procedure just now, and hopefully within 15 days I'll be
Yeah,
able to.
so you will be the expert who will be guiding us then.
I mean, whatever that guy is telling me, I only know
Yeah.
that. I read little
Yeah,
bit on that.
no, the lawyer who's involved in this is going to be a proper lawyer, and the cost obviously for forming it is required to be something. But yes, if the youngsters can understand this, then at a certain stage, definitely they will not be able to do it in 30s because you don't have that kind of foresight. But
Yeah.
it is no, not the corpus, the foresight.
Foresight.
Corpus is okay, as you keep earning, as you keep growing, you can keep adding to that trust. But the concept which is there and the legal powers which are there are wonderful.
Yes, sir.
There is
two
only one.
advantages.
Yeah, there is only one disadvantage that I have seen in this, in present context, is very unfortunately, but yes, true, is that we have two less family members.
Correct.
Most of the people have one child or two children, and they have maybe no siblings and all that. So yes, the advantages are very, very vast of this, and those who can, they should read it, read upon it. It's very nice. Today is the 8th of September.
Yes, sir.
So it is possible that next time we may not be able to do this. Can I? Okay, my wife came. So next Sunday, I may or may not be able to take this because I'm having a batch reunion in Goa. DMT 1986 pass out batch. After so many years, we are managing to have this. So I will try if I can, but most probably it will not happen. So we will try not to have it, and I'll come back here again a little late. So you'll probably miss the next one. But if I can, I will try to have it. Otherwise, you can just send your questions. I will accumulate them and we'll discuss it later on. Is that okay?
Yes, sir. And I will be missing you then. I will be coming to Dehradun next Sunday.
कब आ रहे हैं आप? Next Sunday, okay. थोड़ा भागते रहते हैं.
Anyway, next time.
Yeah, right. So thank you, gentlemen. Thanks a lot.
Thank you,
Yeah,
sir.
thank you.